My name is Josh, and this is the Built for Wealth podcast, a millennial's no BS guide to financial freedom. In this podcast, we are interviewing investors from all different spaces and backgrounds and gaining insights on just how they built their wealth through real estate that hopefully leaves you inspired to build yours. You can follow along at builtforwealthpodcast.com. And without further ado, we'll jump right into the show. All right, today we've got Mike Moulton on the podcast. I've known you for a couple of years through Collective Genius.
Yep.
And you're like an OG in the industry around here. So
I am old.
Yeah. Appreciate you coming on. I didn't say that.
No, that's right.
Say old.
Young at heart. Still try to get 4 or 5 group fitness workouts a week, but hey.
Yeah. So whenever I meet people that are in the industry, most commonly they're new in the industry within the last couple of years.
Yep.
And so whenever I talk to somebody who they've been investing since like the early 2000s, and it's like, you've been through 08, like you were that. So it makes my ears like perk up a little bit. And I want to hear more because I know a lot of people in the market right now are experiencing challenges with getting properties sold. And so you've lived through that.
Yes.
And have done a lot of other investing since then. So why don't you catch us up to speed? Who are you? What are you into? And how'd you get here?
Yeah, sure. I mean, I won't spend too much time on the old days, but ex-corporate guy, worked for one of the biggest multinational corporations for years out of college, started real estate investing on the side, got into lease options back in the day. That's what got me into it. Nice. And back when that happened, everybody here in the Carolinas was freaking out. It was funny. It's like, trends repeat themselves. I think I saw this again a year ago or a year or two ago, especially in South Carolina, where they're like, you can't wholesale real estate. You can't do this. You can't do that unless you have a license. So while everybody was like trying to sign petitions to go like fight City Hall, I'm like, why don't I just scoot over here and go get a broker license? Back then it was a real estate agent license, then 4 more weeks broker license, and then I could be my own broker in charge.
Yeah.
So that's what I did back in the day. And that allowed me to, when the market started shifting, you take a lot of the product that you have for fix and flip, figure out a new finance model on it, and then just sell them on lease to owner finance. So I did that for a number of years. Then that got me to the 08, 2000 to 2010, 11, which we got into a lot of short sales and foreclosures.
Nice.
So did that, just really helping people out. It got tough though, because people started using our services to just stay in the homes longer, and they weren't allowing us to show the properties, and they were keeping them like in terrible condition. So no one wanted to buy them. So that got real rough. And then that got me back into rehabbing, which pretty much was like my sole way. I mean, I was grabbing rentals along the way, single family, but that rehabbing around 2012 and onwards was my bread and butter in the area, because people always wanted, nice product, which especially I was looking in the outskirts of Charlotte back then. There was a lot of people, a lot of brokers and everyone that was trying to feed Invitation Homes was the big one back in like 2012, 13 for REITs. I believe they were owned by Blackstone. I don't remember. But, so brokers and agents were sending the acquisitions people at that REIT the same deals. Like, it was hilarious. So I'm like, well, you guys are all fighting over this in the city. I'm going out to the outskirt counties, like, Iredell, Cabarrus, Gaston, Lincoln, all those. So, and putting nice product out there that no one really had out there. Yeah. So that was it.
Interesting. Yeah. So it sounds like you made some pivots over the years.
Yes.
Like lease options, then, brokerage, flipping homes, all that stuff. Why would you make a change like that? Why does it seem like it's just cyclical?
Yeah, part of it is the real answer is just do what the market will give you at any given time. Sometimes what I've learned over the years is, like, especially having 25-ish years in real estate, is I'm like, like you said at the beginning, like, I've been around, so I don't need to log into social media and see what some guy is telling everyone to do. Like, I've got experience. So if your gut's telling you like to go a different direction, and just kind of, you can test things too. So, people were having trouble getting loans at the time. So we're like, hey, why don't you give us like 5%, 5 to 8% down, 10% down, and just take the property, glorified ownership at that point, and then work to try to get them refinanced later, which a lot of them, once they were in, didn't really care to try to get refinanced. So the pivots were partially what the market would give me. And then partially I realized at some point you can make a ton of flip money, or for the wholesalers out there wholesaling. But at some point you got to start building wealth through holding properties.
Yeah.
So that was a big pivot there. Another reason I start new stuff is just being, probably you suffer from this too at times, just being a visionary entrepreneur.
Yeah.
Something looks cool, like Airbnbs. So, 5 years ago, we bought a bunch of Airbnbs. Then, once you get through COVID, you're like, I could make more money a lot easier just having these be long-term rentals.
Yeah.
So, with those strategies, we make sure you buy them so that they'll go either exit strategy.
Yeah.
But yeah, that was basically it. Those couple things are really what kind of drove everything that I was doing.
Nice. What sparked your interest in investing?
Investing in general. It really was just the excitement of creating capital and cash, but also just the creativity around it and being able to, because I lived the other side in a corporate life and I did really well there in the time I was there. Mm-hmm. I just did not enjoy it. Running someone else's agenda.
Yeah.
Because we would have you'd have like business leaders or business unit leaders come in and they would be there for a 24 to 36 month stint, and they'd cancel all the initiatives we were all working on, after we're about to go live with them, and come in with all their stuff that they want to claim. So it was just silly. So I always had an interest in real estate investing, watched a couple late night infomercials. Not embarrassed to say it. That's what got me started.
Yeah.
And then figured out RIAs and what those were and started seeing speakers coming in and just kind of went from there.
Nice. What was the first deal that you did?
The first deal that I did was really pretty funny. It was a wholesale deal. I called this guy. It was over in, what's that Heights? Right over Wesley, not near, behind Wesley Heights where the Blue Blaze Brewery is.
Dude, I don't know that area.
Oh, you don't know that area?
I don't know Charlotte at all.
Oh, really? Yeah, Johnson C. Smith University. So anyway, I was over there and there was this like crazy boarded up duplex. And so I marketed to this guy that lived in like California. And I'm like, hey, would you sell this? And he's like, yes, I would. So I went over there, took off the OSB off the doors. This was like complete hood. Yeah. And I go in with a huge, back then, now I'm dating myself. I had a 4D battery mag light. So it was like this long, but it also, worked as like a baseball bat if I needed to defend myself. So I go in there, pull the OSB off, and I hear a bunch of rustling in this pitch black. It was like I was in the movie I Am Legend.
Yeah.
Which hadn't come out yet. But I'm like, what the hell was that? So then I learned this trick watching like cops on TV that you just say, police, open up, So I'm in there tapping on the wall and this dude goes flying by me in the dark and rips out through a rear bedroom and there's like a corner OSB broken off and his shirt got caught.
Yeah.
So I was like freaking out. And then I start walking through the rooms and like just the bathtub was full of human feces, like just disgustingness. So anyway, I was able to get this thing under contract and assigned for a $2,000 profit. And it might have even been $1,000. I have the check at home framed.
Yeah.
But it was like $1,000 or $2,000. And I was like, I'm hooked. That was like so much fun, awesome. So now I don't do as daring of things, but with convicts, but that's kind of the way it started.
That sounds fun.
Yeah, it was fun. It's fun till you get stabbed with a needle. Then it's not so fun.
Oh gosh. Yeah. So from there, at what point did you know that like, this is it, you went all in on it? And what was that transition looking like?
Yeah, the transition. So going to a corporate job every day and just being like invited and having to go to meetings that I'm like, this is so not interesting. I was in corporate IT.
Yeah.
And I ended up, my last job, I was reporting to the CIO of one of our businesses. Mm-hmm. And I was kind of like the go-between between the business leaders and the tech guys. So that was fine with my team. So it was cool to travel globally and everything else, but I'm like, you know what? I just need to go do something on my own. And I love building stuff. I kind of found out through the process that I'm really like a creator. I think it started when I was in kindergarten assembling Legos. I would build all sorts of crazy Lego creations.
Yeah.
Now we do it with houses and commercial projects, but
Nice.
but that was pretty much it. I just was addicted to acquiring assets and holding them. I had a number of relatives and people we knew that were in various parts of real estate, either as contractors or home builders or even like multifamily landlording and things like that.
Yeah.
So yeah, I just kind of knew the benefits of it way back then.
Okay. So when did you quit?
I quit 2005 full time. I was about 8 years into my corporate job, and they were my wife Jean, I met her at that job, which was awesome.
Yeah.
But her and I were on the same career path, and one of us was going to have to take the back door to the other, because this company would move you every 24 to 36 months around the globe if you did well. So I just said, hey, they were kind of reorging, and I just said, I'm opting out, and I'm just going to go do my own thing. So I had 5 deals under contract that I was going to either wholesale or rehab and sell.
Yeah.
And I quit. And then all of a sudden, like, I had 1 deal left. The 4 went bad. Like,
oh no.
Yeah. And I'm like, okay, welcome to entrepreneurship. And that's where it just all started. So that was 2005. So we were acquiring, actually it was a cool strategy that would probably work today. We used a tool called, I believe it was, I want to say it was RealNet. It wasn't RealNet, but it was a First American product where you could just pull mortgage data. So we pulled I pulled all mortgages that were less than 5 years old with less than 10% equity, but had a really low interest rate at the time, which at the time was like 5%, was amazing.
Yeah.
So we just marketed to those people in pretty houses. They had to be like 15 year built or newer.
Yeah.
And that at the time turned out to be like off of like Harris Boulevard, like up in the university area, high transient areas.
Yeah.
So I was getting new product and just really able to take over a lot of subject to deals that way because people just needed the debt relief. So then we just went back and managed like the exit strategy with a lease option or an owner finance.
So you were doing sub 2 before sub 2 was like a mainstream thing.
Oh yeah. I've got all the docs like from 2006 or 7. Like we'd been doing them a long time, and it worked out good. I used to use a company called U.S. Loan Servicing. So we would just set them up to service the loan, and then the tenant buyers just felt like they were just paying Bank of America every month, and they'd get their 1099 INT from that company, and it worked out really well. Yeah. So
very cool.
That was cool.
So from doing these lease options, flipping, wholesaling, the market had a huge correction.
Yes.
In 2006, 2007.
Yep.
What did that do to you?
That was tough. Like, so I had built up because I 3 years in it when the market died. And I remember I had a equity line on one of my properties that I was just buying properties from and then just replenishing it. And I remember driving to a closing, and I got a call from Wells Fargo, and they're like, hey, we're actually freezing your credit line with whatever you have outstanding now, and it's just going to turn into a monthly payment. And I'm like, crap, this was going to fund this deal. Oh, no. So like I turned back around, I call the attorney, I'm like, I can't close this today. Then I call my buddy JR in Chicago, does the same stuff. He calls me, he's like, dude, Chase just froze my equity line. And like, this was just like when you, just like in the movies, like it just started going in like a 6-hour period across the US. Wow. Everyone had their credit lines frozen. And so, man, that in itself just really, because from 05 to 08, I had acquired a bunch of subject to nice looking houses. But when those people started losing their jobs, and these were people like, in this area that worked for like TIA CREF or Ingersoll Rand and Davidson, like professional people that just didn't have amazing credit because they'd been through a divorce or something, but they had the income. Right. So I started getting calls like they're professional people. So instead of just like not answering my calls, they're like, hey, can I meet you at Dunkin' Donuts? I said, great. They're like, hey man, like, so I'm getting laid off and I won't be able to pay you. And I know the laws, and I could probably drag this out for 60 or 70 days. So I'm going to do that because I got to protect my kids and not pay you. And I'm just like, so you're sitting like this telling me you're going to screw me. I'm like, I don't know how to take that. So I left. Then like the next 2 days later, hey, Mike, can you meet me at Starbucks? And I'm like, oh God, here we go. And that started going like
wow,
a good percent, like 20-25% of my portfolio. So I was telling my wife's still working in corporate America. She stayed in it. And so she had no idea. Like she's coming home and I'm like, nothing you make really can support anything I've created over here. I'm like, it's awesome you're making like a good 6-figure, income, but
I've made a huge mess.
I have a ton of shit over here or stuff over here. So she's like, okay, honey, well, we'll have, I'll just make dinner and, we'll keep our mortgage paid and you figure that out. And I'm like,
that's so funny.
I'm like, that is
Bless
cool.
her heart.
Yeah. I'm like, yeah, right. So it is cool that I have a place to sleep at night. And then we just had our first kid too in 2008. So,
oh my gosh,
man, it was crazy. So I had to like, I tell everybody it was like having imagine you had 10 kids and 5 needed braces every month. Like that's how it felt with my portfolio.
Yeah.
And I'm like, this sucks. So I made it through. I just scrapped. We had bandit signs to like turn these places, get them resold on terms. People needed a place to live.
Yeah.
But it was just like, who's going to screw me over next? It's like we were getting just trying to underwrite lease option buyers. So it was tough, man. It was a tough time.
How do you deal with the discouragement that comes with that? Because you've built I can imagine that conversation with your wife of like,
yeah,
I have built something that I built a mess, right?
Yep.
Like, and there's no salary, there's no job that can fix this.
Right.
The snowball is going, you're building, like you've got 3 years behind you, the wind's at your sails, and all of a sudden it's all taken away from you.
Yeah.
How do you deal with that?
It's interesting. Like it really depends on the dynamic of your relationship with your spouse. Like my wife's been super cool and super laid back from day one. Mm-hmm. I joke with people because I said we never really had a fight. Like we just don't bother with the negative energy.
Yeah.
Our whole marriage, we've been married 20 years until, and I won't even call it a fight. Like she started working with me during COVID, like 5 years ago, because she got sick of her corporate job.
Yeah.
And now we just have interesting disagreements because I've got 25 years of how to do this in construction, or I'm like, that guy's going to screw you over, even though you can't let him get ahead of you on payments for painting or whatever. She's like, no, Jose understands me. I'm like, this is going nowhere, and then
he understands you.
Yeah. So then I'm always right from experience. And she just laughs because she's like, you never let me do it my way. And I'm like, well, but I've done it so long, there's only one way. You know what I mean? So anyway, back to that conversation, it was just, she was trying to be supportive, but then she was pregnant. We were having our first kid and she kind of had enough going on. So I just had to figure it out.
Yeah.
So it was tough. It was tough.
How did you personally deal with it?
Lots of caffeine, maybe a few too many Coors Lights back in the day. No, but all joking aside, I just had to network. I had to start reaching out to other people. I believe right around that time we got Facebook, so that, all these groups locally started popping up. But it was really just getting out and trying to share what was working. Yeah. It was kind of the idea of a big mastermind, but locally to the Charlotte market. And that's really all it was, trying to hit seminars. There was more seminars back then, going to learn about investing techniques versus mastermind gatherings. So you're just trying to scratch and claw your way into anything that would help. Yeah. Yeah. It just forces you to be resourceful.
So the way you getting through it, you kept doing lease options, you kept getting those down payments, getting people in, and that's what got you through.
It did initially, but it was still tight every month, super tight. So I then introduced fix and flipping. Because I'm like, hey, in any market, if you force appreciation on something that's beat up and make it nice, there will be a price. You just got to buy it cheaper than, as we were talking before we turned the mics on, the curve. Yeah. We may have bought 6 months ago a little too high versus what's going on now. And now you're chasing the curve. But that was basically it, man. Just getting a quicker cash. It's funny to say that flipping was a quicker cash strategy, but I don't know. It's we've evolved so much even since then that now, I got into commercial investing about 5 years ago. And that was from a private lender, had a property that I currently have my office in, like a flex space property down in Wesley Heights. But it was, I don't know. It's just been interesting, like the growth of it. Yeah. And so when my wife Jean came aboard 5 years ago, she had, I always remind myself, like, this is all the entrepreneur world. She's not a true entrepreneur. So it's like, sometimes I feel bad. I'm like, did I kind of wreck her life by bringing her into my dreams? Like, I think a lot of entrepreneurs say that. Yeah. Because she would have been fine being a corporate person forever and then just retire and be like, whatever. And she is an amazing mom and wife first. So that's cool. But anyway, it's like, this is her first time go around, like starting 5 years ago. So she loves like project management, fix and flipping, running projects and all that. Yeah. She doesn't love the sales aspect. So we had a larger team like 4 or 5 years ago. And then when COVID hit, everyone started kind of, I don't know, I wasn't enjoying the results we were getting. We had TV ads running, and we're doing all that. But because we didn't really have the wholesale component, it was that just stacks a bunch of bills every month. So I'm like, I just want out of that piece of it. So we killed the whole acquisitions team, and then just used a lot of my relationships now on the single family side just to keep like 4 or 5 houses going, and Gene handles most of that. Yeah. Well, I just look at our portfolio and figure out what I can move into longer term, like easier commercial plays, basically. So
nice.
Yeah.
At what point getting through that did you feel the relief and feel like, okay, we're on this upward trajectory? Like what was that transition point?
It was basically, so that was 2008 to 11 was tough for a lot of people. So it was probably, I started fix and flipping a lot more in 2012 onwards. So once I was able to get, I was buying HUD foreclosures, and there was a ton of them. Like, they were everywhere. And I used to joke with Larry Goins, because we were like just basically trading like who was going to get the next HUD deal. We bought a lot of them, but like there was people buying them, but that was great because that was regular deal flow that was coming in that I could repair and put on the market.
Yeah. With no marketing.
Yeah. With like no marketing. I had a virtual assistant in the Philippines just making offers with me, and it was super easy. I'm like, I wish we had that now. Yeah. So that was and that's kind of what I had. I know we were talking about like the whole life settlement thing with insurance policies. Like we had like kind of unlimited deals to be able to buy these policies. So that was another aside, but it is easier when you've got unlimited deal flow and you just have to figure out capital and execution.
Yeah. So it takes a huge part of the process like off your plate.
Yes. All the KPIs, like,
managing salespeople.
Yes. It's always tough. I love them all. I guess I am one, you are one. Yeah. But man, we're tough,
Good grief. Okay, so during that time and since then, you've transitioned into doing more commercial, still doing some fix and flips. Yep. What's been like your best deal that you've done in your investing career?
I think, I've got a couple of them. One of them's a longer term play. It's like a huge storage facility we bought in Kentucky that was like 121,000 square feet. Wow. And it was seller financed. So that one's got 10-year terms on it. So I think that'll be nice. Like, it still cash flows. It does well. It's stable. It's not like a super sexy boom bust market. Yeah. It's just middle of Kentucky. So that was good. And then the building that I have my office in now in Charlotte is right on Freedom Drive, like in Wesley Heights. And I bought that in 2019 from a private lender I had that I was able to get it for $800,000. Oh, wow. And it's like a 10,500 square foot warehouse. So I went through, this was my learning in commercial because I got with as many buddies that I knew that did commercial here in Charlotte, developers. And I'm like, what should I do with this building? And they're like, all right, you can, maybe you should use your single family skills and do like mixed use. So I went through a whole rezoning process, spent tens of thousands of dollars, architects, engineers, got it to where we'd have like 2 storefronts and 5 units in the back. And I was going to keep like 2 of them for Airbnb and then have 5 duplicate units on the roof with like a rooftop pavilion looking at uptown.
Yeah.
And I'm like, this sounds amazing. So, you start doing it and I'm like, all right, I got it to pencil. And then COVID hits and I'm like a new commercial guy. So I'm like, I'm not doing this during COVID. So then put everything on hold. Meanwhile, we're using it as a warehouse just for like storing like furniture and stuff for a single family business. Yeah. So then like a year later, I decided to reboot that project, kill the 5 units on the roof, just do it in its current building envelope. Mm-hmm. And then I go back to the architect. We revamped the whole thing. We're just about to go on it again. And then like we had that supplier shortage where like OSB went to like $52 a sheet.
It was like $90.
Oh, it was insane.
Yeah, insane.
Yeah. So that blew my underwriting by like another $1.2 million. So I'm like, the good news, there's a guy named Matt. I won't mention his last name. He's a great dude, but he is like the G of that area and multiple other areas of Charlotte. Yeah. And so he bought like all the buildings around me, put tenants in them, and basically got rents up, long-term tenants. And he's funny. Like he's got bars, restaurants, everything. He bought the rail line from Southern Rail that went right behind my building, took up the railroad tracks, put in a beautiful retaining wall.
Wow.
So like my value has like tripled, like at least tripled. And then I just renovated it about a year and a half ago. So now it's like flex space. I've got a couple national tenants, which are awesome. Mm-hmm. And then we keep a small, like a couple offices down there as well, just that Gene and I pop in and out of. But that's a great one. Like that one's going to be someday. I learned from Matt in our brief discussion when he stopped by, he's like, man, the big play on this is he's like, you shouldn't have done the rezoning and you shouldn't have, why would you introduce shorter leases, like single family type stuff, more toilets and kitchens to build and maintain when you could just do like triple net lease? And that wasn't the end play for this property. The end play is in 10 years when I call you up and I say, hey, like, I'm going to throw in like my 8 parcels. We need yours and the one next to yours or whatever. And there's like a national developer going to put in like 500 unit multifamily mixed use. Yeah. And then we all cash out at a higher basis. And I'm like, oh, it makes so much sense now that I've spent $200,000 in holding costs and soft costs. Like, but hey, I'd rather do that than get an MBA from Wharton and not in commercial real estate and not have the street experience,
Yeah, for sure.
So I'm in a good position on that one. I love that building, and that'll be a good one to hold for a while. So
that sounds like a really good one.
Yeah, I'm excited about it.
Okay, so obviously that one's your best. Any of them that are just like your worst deal that you to this day you just like can't stand the thought of?
Oh, we've all had those single family like pre-built 1950 deals. Like someone sends you like a 1920 built house with a basement. And you're like, I'm going to do it. The numbers are insane. And then you go through like 5 buyer escrows and like there's still structural issues. And you're like, but I fixed the structural issues 4 times. Like I've got a number of those, like not a lot, but probably 3 or 4 of those over the 20, 25 years that I just keep kicking myself like, and why'd you do this again?
Yeah.
Why do you keep thinking these spreads are worth it? So those are pretty much that's a theme with my worst deals are the pre-1950 built construction homes. I mean, they're all well built, but they're just all have so many issues.
Yeah.
So
I'm curious why, if you're flipping homes and you're making money doing that, why would you venture into the commercial space?
So this is a great question. And it was one of those like 3 years ago that I like went up to the mountaintop by myself to have like my Zen tea and just figure out what makes me happy. And it took a while, man. It took like 2 or 3 years to really figure out that what I love to do every day is create, like just either building or I don't know. I would say businesses, but I really don't even like that as much as getting my hands on materials and or cars or trucks or Jeeps or whatever. So I went away from it for about a year and a half. I had 9 different strategies we were doing. I was in North Carolina, manufactured home dealer. So I had that license. So we had 9 or 10 brand new, these new cross modular builds going in like Iredell County. And that was we just had trouble with we had a construction manager that was great for a year, and then he went rogue and screwed up a bunch of projects. So we had all that going on. I had gotten into self-storage with one facility. And so I was interested, typical visionary, like trying to go develop the next thing instead of staying in probably the one thing that we had done well with, which was construction of flips.
Yeah.
So I just got sick of it. Like I just really got sick of the people. I got sick of the excuses on the construction sites, like, and all that. And at one point on a couple projects, like I actually just loaded up the work truck and went out and trimmed out a house for like a week. Like this was like 3 years ago. I'm like, screw it, I'll do it. I'll just put on some country music, grabbed a bunch of trim. I'm like, I'd rather just know it gets done this week and I'll handle the whole thing. And I was like happy when I was doing it. I'm like, I love doing this. Yeah. But I know it's not how you scale and make a lot of money. So, so anyway, that's when Jean, my wife, came back in. Like she was started as more of like an asset manager for our commercial stuff, and then in managing our team we had at the time. And then she's like, I actually like running these projects. So because it's the first time around for her, I said, all right, well, you deal with all the stuff I'm sick of after doing it for so many years, and I'll help you guide you through it. But I'll go do the creative stuff with you. Like when the deals come across and I might buy from wholesalers or whatnot, I'll meet her at the house, and she doesn't have the visionary builder like Joanna Gaines type eye on how to get stuff, put together on the house, but she'll get it executed, So that's kind of pretty much it. So we still keep it, still like the cash income from it, but really it's just moving. You had asked me why in a commercial, and it's just nicer having like that. It's not hands off by any means, but it is a lot more passive, semi-passive. Because if we've got like our larger one in Kentucky, we've got third-party management on it. So that's literally just a meeting every 2 weeks for an hour. We go through all the KPIs, move-ins, move-outs, all that kind of stuff. Yeah. And that's just such a much more chill day-to-day than, and the longer-term leases on the other commercial stuff is way easier than just the mechanics of managing like a house build or rehab, Yeah.
It's a lot less moving pieces.
It is. So unless you love doing it, which we do love doing it, but it's like, I'm just making sure we're constantly building the monthly cash flow, like coming in, recurring, and just hitting those goals with whatever cash we make and put it over there. Or I was telling someone the other day, I have taken like 2025 as kind of a year of pruning, I like to call it. Like I've just had houses that were easy to buy in 2006 or 8, just like someone's like, I don't want this house. And I'm like, how about I give you $500 till it's paid off? Great. But it's in the hood, but now the hood is actually like the nice part of town. Like, so I have some stuff like that the houses are just need to go. I don't feel like renovating them. And so we're just going to take the capital out of those because they're all paid off and just move them, simple investment tracks. Like say you have a $230K cash property, maybe you go buy an $800 or $900K storage facility or just something easier to put it down, get a loan, then you can raise the rents quicker there. Yeah. It just, that's the kind of moves we're looking to do.
The velocity of that money is more powerful. Going towards commercial.
I will say this too, man. I feel guilty. Like I've always been so busy in the hustle and the build and the creating that I've never really, I mean, I have now, but like for years, I never really sat down and even thought about like cash on cash returns on my rentals or like velocity of that money. Yeah. I should have, but I didn't because I was just hustling so much but then you look back and you're like, oh, well, I got a bunch of stuff. So at least that's not a horrible place to be because then the market sort of auto corrects for you. Like if you're in it long enough, it will with inflation and everything. So,
I mean, over the course of 20 years of you being doing this, like the market's been through some cycles.
Yeah.
Yeah.
And that's the thing too. Like I look at everything I have and I'm like, all right, I don't need to hustle so hard. So I kind of, I've got some years on you. Like I turned 50 last October. So I'm like, I don't have to be in a rush anymore. So that's why some of these mastermind groups and things we were doing, I'm like, I love the heart of it. And I've had some of my best relationships and even some deals come out of these. But I'm not in the like super go phase. I'm in the like go, but like protect some stuff that I have and kind of repurpose it.
Yeah.
Cause I don't want to have to go at 60 years old. You know what I mean? And that could happen. So it's just been interesting. It's kind of a process.
I mean, it's the same hustle, but it looks a lot different than it did years ago. You know? Once you have these assets that you've accumulated, it takes a lot more intentionality to continue to grow that versus just letting it sit. You know, like you could be sipping a Mai Tai on a beach or a Coors Light. Yeah. You know, but even the fact that you're still engaged in trying to make wise decisions like that just shows it's the same hustle. It looks different.
Yeah. It becomes more fun. Like with the chess pieces of what you have, like I was saying, like those little investment tracks. I wish somebody would have mentioned that to me years ago. I came up with it like 2 years ago. And then I believe it was Dan Underwood at a CG meeting presented on the exact same thing. And I went up to him and I'm like, man, that is exactly what I've been formulating as well. Like just now this is if you're not like the big multifamily syndicator guys that did it right are like, you're crazy. Just go raise a bunch of capital and buy something for $8 million and get the rents up, sell for 12 and pay everybody out. That is a thing if you can do it. Yeah. It's a tougher environment now. But I'm just saying for like the more down to earth mom and pop investors, I mean, these investment track ideas are really cool. Like just taking something that you have and like just 3Xing it, value-wise it, 4Xing it into something else. And then maybe like take a year and then maybe do that again and just slowly and with intentionality do that. Yeah. And before you know it, like we've all had those friends that have 1031'd into stuff in like 4 years, like 200K home, 800K, 12 unit. Then they're like 24 unit at like, you know, whatever. And then, you know, they just did it because, and that's all they had. They didn't have business operations, sales and acquisitions, marketing budgets, TV ads, like all the stuff, direct mail, all that stuff that you have to manage and get a return on it.
Yeah.
I don't know. You drive around any of our towns here, Kannapolis, whatever. I mean, there's just OGs that just drove by a handwritten sign and bought that corner lot over there.
Yeah.
You know what I mean? It's like, sometimes it's just that simple. And I think as I've gotten older, I'm just like, wow, it really is that simple. And we overcomplicate it.
Yeah.
You know?
Is there any one investment channel that you look back over the years that you wish you could have just focused on that one thing versus like having a bunch of different irons in the fire?
Yeah, I wish. I think everybody says this, but during those lease option, like I just told you how awesome that lease option subject to program was. Well, subject to first, then lease option out. I wish that I had kept more of those, just subtude and rented. I mean, some of my best single family appreciation deals were just ones in like Highland Creek over here.
Yeah.
And just buying them subject to, the intention was to sell them on lease options, but the people never could get their credit fixed. And then a lot of those like people always seem to have similar issues popping up. Like then they got through a second divorce while they're in the house, or they just, you know, it's just insane stuff happens to some of these people that attract it.
Yeah.
So some of those deals I did end up just selling like, you know, a number of years later, and they had tripled in value. I mean, just, it's insane.
Wow.
So like for my advice to anyone in single family is either, you know, it's probably both is the answer, but buy them. You don't buy them for monthly cash flow. Even like you probably know Matt Saunders, like good friend of mine out in Virginia Beach. I mean, his whole portfolio is single family, is free and clear. It's like 70 something homes. And he still says his yield's like 4% or something crazy. Like, so he does well, but I'm saying like, really you're buying single family for the longer term appreciation and tax benefits, like not to try to get a bunch of $150, $200 a month paychecks coming in.
Right.
And that's where I think I get frustrated when I see some of the, like Dave Ramsey stuff or whatever. It's like, yeah, you obviously haven't lived this because you haven't had a $5,000 turn with carpet and paint, which wiped out your $150 a month for that whole year.
Yeah.
You know, and it's like people don't. So the game with single families is really trying to just keep kicking it year over year down the line, that asset, so that you can get the appreciation.
Yeah.
So I don't know if I answered your question, but I do have friends that went the other route and gathered 100 or 150 of those during that time. And then they just became hard money lenders in 2012. So they had one admin managing their portfolio, and just literally were just like, their acquisitions became making loans on properties people screwed up. And when they wanted them to succeed, but then when they screwed up, they just take it back and put it in their portfolio.
Wow.
So it's interesting, right? Like those guys gave up a lot up front because they didn't have like 30, 60K flip paychecks or wires to like buy the Escalade or whatever you see everyone else doing, but they held off, and now they're the OGs, you know, with whatever, 40, 50, 70 grand a month coming in from their portfolio. So
yeah,
it's interesting.
It is. For everything that I'm hearing you say is like you having a long-term vision for it and being in it for the long run.
Yeah.
Like you're going to win. Like if you would have just cashed out in, 07, 08 and just thrown your hands up,
yep,
you'd have been missing out on so much opportunity for you to build wealth for your family.
Yeah.
And because this market is cyclical, like we're going to have challenging times.
Yeah.
Like it will happen, but it's also, over the last century or so of real estate, it's just, it's the cycles. You just gotta, there's the boom bust, and even the investing things like that you're doing, like the sub 2 lease options. There's still a market for that right now.
It's totally rebooted. Now is the time to do it. Yeah. It's crazy.
We've done a handful of them this year alone. Either, sub 2 seller finance, buying something at 0% interest and selling it on terms, right? Like there's so much opportunity out there. It helps to have those tools in the tool belt for sure.
It does. I think if you're still out there, anyone listening and you're meeting with sellers, that's when you get the opportunity to just really listen to what they want. I mean, it's classic sales, but it's funny. My CPA always tells me, he's like, Mike, you always come back with these like insane seller finance situations. He's like, why don't you just go hit the road for like 3 out of 4 weeks a month and do that and talk to like, storage owners or whatever.
Yeah.
And I'm like, I will, and I should. That's the 20% that I should be doing in my time to get to the 80. Mm-hmm. But I'm also like, it's not as fun to me. So like, I'll still do it, but it's like, what's fun to me is learning like, what's going on in AI? How can we AI parts of our business so that agents are working 24/7 instead of like someone who's like complaining because they're not feeling well today and coming into work, like that kind of stuff.
Yeah.
So it's like, it's just funny as an entrepreneur. It's like, what can you just make hamburgers every day and make a ton of money? Because you will if you stick to it. Or are you doing like, I took more of I was interested in a lot of different things in a path. Mm-hmm. And so I did all those and we had like 9 or 10 different real estate at P&Ls going, like different types of stuff.
Yeah.
Airbnbs, storage, modular homes, like fix and flips, single family rentals, flex space. I mean, it's a little exhausting to kind of play it back, but because we were the operators of all those. Yeah. If you're going to do all that, I would say don't be the operator of all of those, because you never do anything like 1,000% awesome. It's always like 70, 80% because something else comes up,
Out of all of those, what is your favorite investing channel?
Right now, it's kind of unfair because you're asking me at the end of I wouldn't say hope I don't get hit by a truck, but I'm saying 25 years in, right? 25 years in, my favorite is more of the commercial assets because they're just, the tenants are different. It's just easier. It's not toilets and toilets and residential tenants. Yeah. It's just like on the storage side, it's boxes. On the flex space side, it's bigger boxes.
Yeah.
You're getting paid generally every month. So it's just an easier burn. Mm-hmm. It really is. I will say though, you can screw up, because businesses, a lot of those assets are businesses as well as the real estate. So you can very easily buy something and it goes down in value if you don't run it right. Mm-hmm. So whereas a single family home, you can buy it and you may not rent it right, but if the area goes up, you're getting that appreciation.
Yeah.
So right now I would say commercial, on the day-to-day, do stuff in my sleep. I can rehab a house like in my sleep because we've done so many of them. And I do enjoy that. I always tell people, like right now we focus mostly on the affordable housing, like price point, like $250K and below, and just try to provide nice product for people. But I tell people it's like, you know, like there's those guys that restore 1970 Chevy C10 trucks, right? Like they know every part number of those vehicles. And that's how we are with some of these like first time home buyer product. I just know, like the US Jean, she's like, all right, I got like, you know, my Amazon shopping list saved. I've got, you know, 4 different vanities we use, you know, like just build little systems and just execute, you know?
That's cool.
Yeah.
How would you classify your level of risk tolerance?
All right. If you ask Jean, she'd say I'm a nutbag and I like take way too much risk. I think now even myself, I've toned it down. I was super high risk because I was always like, hey, I can always rebuild it. Like I talked to some of these young bucks, these masterminds that are like 25, 27, and they're doing some insane things and never been in a downturn. And some of them are a little sociopathic, but I respect them because they're like, well, I just raised like 17 million. If it goes bad, I'll just file bankruptcy and next year I'll do it again. And I'm like, I get it. But when you're raising capital, you have like,
gosh.
And these were some of the, you know, just core value imbalances I have with a lot of people in our world.
Yeah.
Cause I'm like, no, if I'm raising capital, I'd probably sell my house to make sure you're whole. I'm not going to like screw you over, you know?
Yeah.
And so just some of the people I'm meeting, I'm like, man, you got runway because you got time because you're so young, but like, don't waste it by being a D-bag, you know? Like, like be a good steward of everybody and you'll do well.
Yeah.
But,
interesting.
Yeah.
Okay. So obviously you've had a successful career, some ups and downs. How has real estate changed your life?
It is really, you know, as much as I try other asset classes or business types, I've dabbled in different things. I just love real estate because there's so many different things you can do with it. And I think, it's really changed my life because I'm not stuck in a W-2 that I was unhappy with. Like it's really given me freedom of schedule. I would say that's our biggest asset is, you know, if I just want to sit in a coffee shop for 2 hours and read about AI or whatever, right? I can do that because no one's telling me to be anywhere. So for me, just having that kind of freedom and creativity to do the types of deals I want to do and to just get my time back or, you know, do stuff with my family. That's been great.
Yeah.
You know,
that's awesome.
Yeah.
We were talking about this a little bit before. You had something you presented on it not too long ago about buying up life insurance policies.
Yep.
Give me a brief rundown on this because I think this was a fascinating investment strategy.
Yes, it's super fascinating. Actually, Warren Buffett buys, I think it was $100 billion of face value of life insurance policies a year.
Oh, wow. So
it was like in 1911. This is what I presented on, but just for the audience, just real quick, some guy needed a heart transplant in 1908. The only money he had was to sign over his life insurance policy to the surgeon. The surgeon said, I don't know if that's a thing, but I'm going to do the surgery anyway. I'll take it. The guy passes away like 2 years later. He goes to the district court and says, hey, I want to cash in on this other guy's life insurance policy. That's the key. And they're like, are you the beneficiary? He's like, yeah, because he assigned me his interest, just like a mortgage note. And they're like, no, we're not going to allow it. So he took it to like Supreme Court, got it approved. So that became an asset class in like 1911.
Yeah.
So basically when people, you'll see on TV now, there's like one publicly traded company, but when people are younger and they might get married, they get life insurance. And then as they have a kid, they acquire assets, they do become real estate investors, they buy multifamilies. They're like, I don't really want to pay on this premium anymore. So there is a value to those policies. And what the insurance companies will give you is generally very low. So there is a market to be able to buy these on the secondary market and hold them. But if I bought your policy, I would underwrite you health-wise. So I would basically you'd sign a HIPAA release, get all your health records, and as an investor, then I have to make your premium payments. Like you get a portal, just like a Bank of America mortgage, and I have to make it until you pass away. It sounds awful, but but it actually gives people relief because they can sell an asset they don't need or they can't afford it.
Yeah.
But then when you pass away, like if I bought your policy for like $35,000 and made payments on it, say you had $1 million policy, I would get $1 million face value return.
Yeah.
So our strategy was basically just, you really do well with it when you buy a bunch of them and you put them in a fund strategy so that you can stack it with, we were stacking people that were going to pass away from like 0 to 2 years, 3 to 4 years, and 5 to 6 years, because you get the 5 to 6 years a lot more reasonable.
This is so morbid.
It's so morbid. And the initial reaction is always laughing. And we were too. We were like on the first conference calls, like, is this really a thing?
Yeah.
And it is a thing. And it's crazy because now you're battling like all this technology that's keeping people alive longer. But the majority of people are like been smoking cigarettes their whole life and drinking or eating like eggs and fat bacon every morning. And they're probably at 70 not going to do that again.
Yeah.
You know, they're not going to reverse.
Yeah.
And then there's also groups of people that just put these funds together. They'll just say, hey, listen, like males like over 74 years old only have a life expectancy of XYZ. So I'm just going with the odds of that in general. I don't even care what their health records are.
Oh, wow.
So I started looking at like ways we could use AI to sort of underwrite these policies as well, like redacting names, of course, but saying like, hey, you've got John Smith. We're looking at him. He's got comorbidities. He's like, he's got lung cancer. He's got this, he's got that. By the way, we saw he went into the doctors like 3 years ago for a colonoscopy and this, and like, it's just crazy. So there's no real art and science to it, but it's the exact same mechanics as real estate. I mean, you have like appraisers in real estate. You have like, there's like 6 certifying like appraisal groups in the US that people listen to when you're buying an insurance policy as an investor.
Yeah.
So if you can buy someone's policy and pay on it for a year and they've aged in that process, and by the way, you pulled their HEPA records again, because when you buy these policies, you have the right to pull their records every 6 months, and you see, oh wow, they had another like health issue. Well, if you then go to these 6 parties that evaluate these, they're doctors, and they'll just be like, yeah, that's now worth, or they're closer to death, so it's worth a lot more. Like, it's crazy.
It's wild.
It's wild. So
what's a tip? Well, like, is there like a typical investment? What does that look like? You're buying something for $20,000, you're paying X amount, and then hoping to get X amount at death.
Yeah, you really could. There's a lot of different ways out there, but if you're in them at like 30% to face value all in with the payments and the purchase, you're doing pretty good. Like, your IRRs can get really high. The challenge is, so coming from a real estate background, when I was presenting this, a lot of the people we were presenting to in the real estate world, like you know your craft, so you know how to turn money quicker with your own hands and get depreciation from like benefits, right? Yeah. So when you're doing life insurance policies, there's no depreciation benefits. So really the target investor, I mean, you could say, hey, Mike, I'm doing, 10, 20% of my portfolio I'm putting in life settlements. Great. And that's where, if I do this again, I'll target like family offices and trying to get into that group of people so that we can say, you want the guys with like, hey, I've got $100 million, take $2 million of it, and I'm coming into your fund. Because like, they're not expecting a dividend. Like, that's kind of the challenge with it. Like, the dividend, the way we had set it up is when people pass away, say you put 100 policies in a fund, when people pass away, we would pay everybody out.
Got
like it. as an investor.
So it's kind of like this windfall of
payouts. So over 3 to 5 years, your IRR target could be 20% or 25 or whatever it is, but you might get like 7% the first year or maybe nothing. But then in the final years, you're getting a windfall because people are older in their policies and passing away.
So interesting.
So interesting.
Does it only work at scale, or can somebody buy just like one-off policies for themselves?
No, you can buy one-off policies. It's just better to do it in a group setting, in a fund structure, because you reach a normalization, the fund does, where like people start passing away at different times, and it helps pay the policies of the whole fund, all those policies. Yeah. If you buy, there's someone you and I both know that I'll tell you after, who didn't know, and he bought like 4 or 5 of these. And what happened is that those people he bought are living way longer than expected, which happens to some of them, right? So if you think of it like a multifamily, like a 100-unit multifamily, you're going to have people vacant, people getting evicted. Yeah. So you're going to have some of that, but you're also going to have people that pass away earlier. So it could work out really well for you if you bought 1 or 2, like if they passed away sooner than you expected. Otherwise, you're going to have to pay their premiums while they're still alive, and you're just watching your return go down like until they pass away.
And do those policies stay at the same price, or do they increase the older that they get?
No, they would increase. The payments could stay standard. Fixed, but the value as someone gets older and has more ailments, the price goes up to sell them, to like the street value of them.
It's so interesting. My like conspiracy theory mind, like I love a good conspiracy theory.
Yeah.
Makes me think like you got big guys like Buffett, who's spending $100 billion a year buying, we need to fact check that.
Yeah.
But
it's a lot.
But they're buying those policies, and like, what are they doing to influence like the food industry?
Yes,
some of these other things to get people to live for a less number of years so that they get like insurance payouts. That's just my conspiracy theory.
Absolutely. Like you start seeing like cure for cancer or cure for this or that get shot down.
Yeah.
Then you're like, are people trying to control the world population? Is there a food shortage? Like, I think I've heard that there's never going to be a food shortage. Like there's so much technology now around it. But no, I agree with you. It's super interesting. But what I found with that business, it's really hard to get people to invest. Like we weren't in the right circles because I had like 25 years of real estate guys. And I really just need to be like family office managers, just people that are like, can allocate money across. It's a lot easier.
Yeah.
Or the people would all come, you can get people to invest, but then, year 2, year 3, they're like, I haven't seen anything yet. And they get frustrated. And you're like, I told you this could be.
You're just like paying money out. Yeah.
Yeah. 3 to 5 years till someone, till the majority of them pass away,
Is there like a marketplace for this, or do you have to get licensed to trade them, or?
Yeah, there's a super tight marketplace. It's like an insane amount of licensing to be able to do it yourself. So I have a partner that like I got invited in to be able to do it. But there is like a marketplace where you can it's just like real estate. You could assemble a number of houses in real estate and sell it to Blackstone or whatever, any of those guys, or BlackRock or whatever. Same here. You could assemble onesie, twosie, 20, 30, 40 policies and sell them to Berkshire Hathaway or whoever.
Can you just like, like your neighbor they've got a life insurance policy. Like you just ask them if you could buy it. Is it as easy as that?
It isn't. You can't do it. That's where you need the licensing. So it has to go cleared through one of these like broker dealer guys that has all the licensing. Yeah. And the licensing is so hard to get now. So you really just need to know a bunch of people. And since then, I actually through a friend that I had in my corporate world in those 8 years, I found his brother-in-law works for the only publicly traded company, and he's like a sales guy there. So like I have a dispo way to do it too, through there. So it's interesting. And honestly, I was just saying to my wife, Jean, I'm like, I'm back in the different types of industrial real estate or things we're doing. Like this is a whole acquisitions process again. It doesn't have to be as crazy because I could literally just buy like 2 good deals a year and be good. I'm fine. But so I'm always like, do I want to build all that again? Yeah. That mousetrap. But I'm like, then you look at these life settlements and I literally could just, we have unlimited views of these policies, and you try to put the best, like, can you learn better underwriting and learn what's good and what's not? And should I just start up another fund in that? I don't know.
It sounds like government bonds, like AAA rated bonds. Like you've got like the 90-year-olds, the 80-year-olds.
Yeah.
This is wild.
It's fascinating stuff, man. It really is. Like, who knows? I may start another one again, another fund in that. I just got kind of just diluted with the amount of different. I'm really, like I said, 2025 has been a year of pruning. I'm like, I don't want to do 9 different things, and we haven't been. We've been doing like 3. But I'm like, even that, it's like, let's just channel it down. Personally, things are good. We've got. Well, I had built like kind of a family compound over here a number of years ago. So my parents are living on our property. It's been cool. Nice. And then I'm kind of looking, we're part owners in a house down in between Hilton Head and Beaufort. So we go down there on the water sometimes. And I'm like, I think I might want to build like maybe like a southern family compound on the ocean down there or the marsh. Yeah. So I'm kind of, that would be fun for me because I like construction. Yeah. So I don't know.
Good deal. Awesome. Well, this was fun, man. I always enjoy talking with people who've been in the industry for some time and all the experience that you have. So I appreciate you sharing that.
Yeah. Thanks for having me on.
Yeah. That's all we've got for today's show. If you loved the content, please leave us a rating and review. It really helps us grow. If you want to follow along my journey as a real estate investor, you can go to builtforwealthpodcast.com and you'll find all of my social links there. Thanks for listening. Nailed it.